Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do the top-down analysis of different financial securities using pure price action trading strategy. As we continue in this trading weekend, we understand that the currency market is currently closed. So, as is customary, we do top-down analysis of Deriv synthetic indices. So, for those of us that are into the trading of these indices, we're going to be looking at the top-down analysis of one of the most popularly traded index, and that's Volatility 75 index. So, let's get to it. Currently, I'm on the monthly time frame, and as we can see, this particular index has been bearish for a very, very long time. However, one thing that I'd like to point out is that it has been so bearish that even taking out the lowest price ever that it started with. So what I'm trying to make is that it has gone down so much that it has created like the lowest price ever. However, another thing that I would like us to take note of would be the strong reduction in the momentum of the downward movement. So if we look at these candles, we see doji candles formed here severally. Then we can see the momentum of the bearish candles reducing, signifying that sellers are no longer as comfortable as they were initially with continually selling this particular asset. But having said that, it's still not enough to say that this particular index wants to start moving upwards. So for those that have been following me, why I'm taking time to explain this is that on a monthly time frame, I try to get my directional bias. So as it stands from the information the monthly time frame is presenting before us, Volatility 75 index is still bearish and heading in the downwards direction. So we'll go to the weekly time frame where we get to look for a structure of the market to work with. So maybe probably on the weekly time frame, we can get a structure to tell us if the market is ready to start heading upwards. Now, from what we can see on the weekly time frame, I try to zoom in for us to see it properly. We can see that the market is still very much bearish. How do I mean? We can see that market made a low, a lower high, ranged a bit, made a lower low, a lower high, and the market just pushed downwards to make a lower low, and it's currently trying to do a retracement. So if I'm to go to the line chart to see the kind of structure that we have, so the structure would be this. Now, this is a simple or a popular bearish structure where we have like the higher low, or rather the lower high, and then we get to lower low. We expect a retracement towards the initial lower high, and like I had explained before, we get to have this as our key point of interest where we expect price to come into the zone and continue downwards. And like I always say, most times this retracement upwards gets to even go up as far as creating like a double top before price decides to move downwards. So this is a simple structure that we have, the simple chart pattern that we have to work with. So now having this in mind, let's now come back to the candlestick chart to see how we can add our basic tools that we use in analyzing the market for us to know how to take advantage of whatever the market is presenting before us. So if we come back to the candlestick chart, the first thing that I had here would be my trend line. For those that have been following me for some time now, you understand that I use three basic tools for my analysis: the trend line, support and resistance zone, as well as the Fibonacci Retracement Tool. So if I'm to pick a zone here, it would be this strong and obvious rejection zone. So for those that do not know how to draw those key zones, um, key point of interest. They are simply rejection zones. I have a whole a video dedicated to it on the channel. You can always check that out. So I have my trend line. I have like a former support zone that has just been taken out. So we're expecting it to act as resistance when price gets back here. And then finally, I'll add my Fibonacci retracement tool. So it's a very, very simple strategy that once you have these three tools together aligning to give you a confluence, then the probability of getting a very, very good trading opportunity becomes very high. So now if I'm to expand this, you see that this particular zone now fills the zone that I call my Fibonacci retracement golden zone, which is the zone between the 61.8% and 50% mark. So my confluence is actually set where I have my trend line, my Fib2 with the golden zone aligning with the resistance zone. And of course, we can see that from the green candles, price is already gradually pulling upwards. Now, let's not forget that we already had our take from the monthly time frame that this market is bearish and that our favored direction is what? Downwards. So, having all this in mind, because I already have my confluence set, my expectation would now be that I'll be hoping for price to come upwards into this fib zone, and then I can start looking for what? Sell trades. Or I can as well wait for price to come into the fib zone, range a bit on and try to get a third touch of this trend line. Then I can start looking for my sell trades. But because we are on the weekly time frame, it's usually not feasible to start getting into trades on the weekly time frame. So the next best thing will be to go to the daily time frame, which I call the tradable time frame, to see the most recent trend of the market, what the market is doing currently. So on the daily time frame, what we saw from the weekly time frame becomes a bit more clearer. We can see the strong momentum with which the price broke the zone that we've drawn, the former support zone. And then we can see also, because we said the price is making a retracement, or we're expecting a retracement back into our key zones, we can see that if we zoom in again, that the market is trying to pull upwards into this zone. So the question I always ask is, once we're on the daily time frame, is how do we take advantage of this setup? So like I always try to remind us, trading is one thing that requires patience for us to succeed, as it's every other thing. So I would like to advise I will wait patiently for this retracement to come into the zone. Remember, in trading, it is always best to sell high and buy low. So for those that want to sell this particular asset, it's better to wait for the price to rise as high as coming to touch the trend line or coming within the zone. So even if we were to go to the H4 time frame, so we can see that the market is making highs, is making higher highs and higher lows. In other words, the market is retracing upwards. For those of us who are very, very, very skilled, you can even include a bullish trend line here and try to look for buying opportunities. But I wouldn't advise this because the market has perennially been in a strong bearish trend. So, like I said, patience is key. If you come across this at any time, you can compare it with your analysis and also monitor how this trade retraces into these key zones. And then you can confidently take your sell trades from these areas. So, and of course, if you're able to patiently monitor this and get into this trade, you can see that you'll be having a very, very long trade to make profit from for a very, very long time. So, this is my simple take on the popular volatility 75 index. So, like I said, this is like the most traded Deriv synthetic index, and that's why it is usually very, very volatile. So if you're into the trading of the synthetic indices, anytime you come across this, you can always watch it closely. So like I said, this is my take on this index, and I wouldn't want to stretch the video much more than this. If you feel you've gained anything from this analysis, I would only like to plead that you click on the like button and share with others to gain as well. And if you're coming across this channel for the first time, this is what we do. We do top-down analysis of different financial assets, so you can subscribe for subsequent videos. Thanks for stopping by, and thanks for watching till the end. Have a wonderful weekend. Cheers.